China. 30 years ago, they liberalised the economy and they haven't looked back since. But suddenly, people are getting slightly sceptical about the Chinese story. I mean, for goodness sake, it was 11% growth GDP annually not so long ago. It's fallen to 7.6%. We wish we could have 7.6% in South Africa. But will the landing continue to be a little bit harder than expected? In the Joburg Power Lunch studio is Dirk Kotze, who's the MD for Africa at the Beijing Axis. I'm not being rude, Dirk, but soft or hard, what do you think?
I think we'll see a soft landing most definitely, but then again you have to define soft and hard. In our opinion, our position is that a hard landing would be defined by a collapse in fundamental growth drivers and also a government inability to do anything about that. We think that won't happen in the next, let's say, short to medium term. We believe China will manage this landing. It may not be entirely soft, but it won't be hard either.
Okay, what would you define as a sort of a softish landing, a nice sort of featherbed landing? We've got 7.6% GDP growth at the moment. That's the official number. Some people dispute that. But if we came down to 6.5 to 7, that would be soft enough, wouldn't it?
Yeah, sure. I mean, there is an article of faith that China has to grow at 7% annually in order to maintain social stability. I don't quite believe that to be based on anything reasonable. Even if it goes down to 6.5% growth, the biggest impact really will be on the confidence in the economy. But I think as long as the government is seen to be doing something about it and seen to be fairly competent at what they are doing, I think there won't be a hard landing in the sense of a collapse of drivers, social unrest, and so on and so forth. So I think soft landing, 7% plus is what we're looking for in the next year or so.
Yeah, I think the social unrest issue has probably sort of dissipated somewhat because of the inflation coming down from 6.6% not so long ago down to whatever it is now, 2.3, 2.2%, something like that, and pork prices coming off, and that was a real danger. But that seems to be out the window now, for now anyway. Do you think that the authorities in China are ahead of the curve? It seems to me that they are very, very quick to move when they see any risk of a hard landing. Do you agree with me?
Yes, they are also very consistent in what they're doing at the moment. They have steered clear of populist policies. They have countered the whole temptation to reignite the property market and so on and so forth. So I think what is behind that really is an acceptance in China that you can't redo 2008. You can't have another large stimulus because that has several negative effects by itself. They are now accepting that the Western world is going to have slow growth for the next, let's say, decade or even more. Their export markets are affected by that, and for that reason they are looking at playing the economy into a long-term trend that is towards more efficient growth and to more efficiency within the economy itself.
Were you encouraged by the PMI data, the flash PMI that came out from HSBC 3 days ago, which showed a rise from 48.2 up to 49.5 for the last month? And if you were, do you think we can go back into expansion mode for the manufacturing economy of the world's second largest economy, China, in the next couple of months?
Well, the general perception or general opinion is that the economy will turn the corner in the second quarter of this year. So I think we will see more positive news coming out of China in the third and most certainly the fourth quarter. As far as manufacturing output is concerned, yes, I think it will pick up. There's a lot of overcapacity in China, so expansion of manufacturing won't have the same multiplier effect as it may have had in the past, though.
There is, of course, a lot of people, particularly Americans, that want the Chinese to start spending. They want to impose their own economic model on China. In other words, don't save, go out and spend, so that even if Europe is a basket case, and even if the American economy is growing rather more anemically than it should be, the fact is that if the Chinese people are spending money, then the Chinese economy will be fine, and the world will be a cushion from any woes elsewhere. Do you think that they will do that, or do you think that the Chinese people are inherently savers and we can't apply these old developed world models on such a country?
Well, you can't really impose a spending model on a population. You can impose it on a government. But if you tell people to start spending more and to raise their own debt levels, household debt, then you're really touching at a very raw nerve in the present situation, because many Chinese households simply come from a recent history of very precarious existence, and also saw that the property bubble now burst, and that caused a lot of households to lose a lot of money. So I think right now the general mode of the Chinese consumer is to batten down the hatches, to be careful, to save for when the economy comes back. When you talk about government spending, well, that's a whole different story. China hasn't been short on spending in the government sector. The problem is spending is becoming more and more efficient as the state sector is becoming more and more bloated, as the private sector is crowded out. Over the past 30 years, really, the model has been that state companies have expanded, and their inefficiencies were paid for by increases in productivity from the labor force. Now, since the export markets have really quietened down now in the last 3 or 4 years, and most recently definitely, you don't have those export earnings anymore to paper over the inefficiencies of the state sector. So there is a need for reform in China. More spending will just increase the problems that they have at the moment. That is not a solution.
Dirk? Dirk, wise words. Thanks so much for your time this lunchtime. That's Dirk Kotze, who's the MD for Africa at the Beijing Axis.